Chris, the election outcome, whether we like it or we don't like, historically will always been a binary event. If not a binary event, it's always been a swing event. But the elections are at least a year away. So do you think, let's say, from May 2023 to May 2024, one should not worry too much about election because this event is at least a year away. We should not start fretting over it right away.
No, I think for the next 6 months it's premature to worry about that. I completely agree. So the key issue for the next several months is, first of all, are we right in our assumption that monetary tightening has peaked? And second is to keep an eye on the on all hints of a capex revival. Also, I think the rural economy, I've come across, there's some concerns about the rural economy being weak, but it seems to me with the property market clearly in an upturn, it should mean growing construction activity, which should mean more employment opportunities on construction sites, which should mean money going back into the rural area.
As a house, Jefferies and your strategy reports, they always have been bullish on private banks, financials. Now, financials have had a honeymoon period in the last 12, 18 months. Earnings have been strong, margins have been strong. Do you think financials a great story, but it is more like a consensus baked in prices?
No, I have to admit there is a consensus view on owning banks, but I'm going to still own the banks. I've been running my Asia ex Japan long only agreed and fair portfolio since 2002. So I would say in the more than 20 years that portfolio has existed, if there's one sector where there's always been an allocation in an Asian context, let alone an Indian context, is Indian private sector banks. So to me, that story remains intact. That's the most straightforward story in India. So if there's a global investor who wants to invest in India and hasn't got the bandwidth to invest in lots of stocks, that's probably where they're going to invest. But right now, with the monetary tightening cycle over, the obvious place to add to, at least I think it's over, the obvious place to add to exposure is property stocks. So the property stocks went vertical in 2022.
22, yes.
When we got second half of 22, they went vertical because suddenly the market realized the property upturn was finally happening after a 7-year downturn. Last year they corrected because we're in a monetary tightening cycle, but actually the property market kept the actual physical property market kept recovering. So the moment we get hint of easing, the property market stocks will do very well.
So can I say
the property stocks will do well.
Yeah, so can I say that Chris Wood is in fact urging our viewers that don't buy real estate, but buy real estate stocks in India?
Well, right now that's the safer trade, but I think they'll both be going up. The other point about real estate is because you had this dramatic, when I say dramatic in its impact, Real Estate Regulation Act, which has caused this dramatic consolidation amongst developers, which means there's a fundamental lack of supply because it's much harder to develop property now from a developer standpoint because you've got to have the balance sheet to keep 70% of the pre-sale cash flow in escrow, which means that the supply is going to be lagging the demand. So I think it's a very straightforward story.
So Chris, your portfolio is in public domain. So I'm going to just read off the names what Chris Wood's model portfolio currently has. It has Godrej Properties, real estate company, GLF, India's biggest real estate company, Macrotech developer, India's biggest residential real estate company, and I think there is Century Textiles there, which is also real estate play.
Real estate related play.
Yeah. So you pretty much like 4 real estate stocks, even though the weightage of real estate in the Nifty is very low. You are not overweight, but you are double overweight on real estate.
Yeah, but in my Asian portfolio, I added to the real estate stocks last week.
So when you tell your clients about buying into real estate stocks, do you get a pushback or are they open to the idea?
No, I think the domestic institutions here have always had a prejudice against property business, property stocks, because they don't think it's a long-term business. But actually that's a bit strange because people buy property stocks in the UK market, the US market, the Chinese market. So it's really a question of where you believe we are in the cycle. But it may have been some of these prejudices against the property companies may have been valid in the past, but this time around, given the very dramatic intervention of RERA, you can only be developing in India as a listed company if you've got a strong balance sheet. So you have a dramatic consolidation which should be to the benefit of the survivors.